Slide number 8, underwriting and rating, assessing the risk. Imagine you are the captain of a professional Indian cricket team and the most important match of the season is about to start. Before the toss happens, you walk out to the middle of the ground and look at the pitch very carefully. You are looking for cracks in the soil or moisture on the grass because these things change how the ball will behave. You are checking the weather to see if the clouds will help the fast bowlers or if the sun will help the spinners later in the day. You are also looking at your own players to see who is fully fit and who might be carrying a small injury that could slow them down in the field. This whole process of evaluating the conditions and the players before the game starts is exactly what an insurance company does before they agree to give a policy to a customer. This scientific process is called underwriting and it is the essential heart of the insurance business. According to our session, underwriting is the process of selection and classification of risk. The company acts like a professional filter or a large funnel to decide who can join the pool of funds and exactly how much they should contribute based on the level of risk they bring. If the company accepts everyone without checking, then the pool would empty very quickly because too many bad risks would enter. This would be unfair to the healthy and careful people who are also part of the pool. Let us look very closely at the different types of hazards that an underwriter checks during this selection process. A hazard is a condition that increases the chance of a loss happening or makes the loss more severe. The sources show us that there are three main categories of hazards shown in the risk selection funnel. The first category is the physical hazard. These are tangible conditions that we can see or measure with our eyes. For example, if you are insuring a building, the construction type is a major physical hazard. A house made of wood or straw has a much higher physical hazard than a puka house made of solid concrete and steel because it catches fire more easily. If we are talking about life insurance, the physical hazards would be things like the age of the person or their health habits. A person who works in a dangerous chemical factory or a deep coal mine has a higher physical hazard than someone who works in a quiet office. These are facts that can be written down on a form and checked by an expert. The second category is the moral hazard, which is perhaps the most difficult one to measure because it is about a person's character and integrity. It is hidden deep inside their mind. If a person has a history of being dishonest or if they have an intent to commit fraud, they are considered a high moral hazard. An underwriter looks for these signs by checking the person past record and their financial status. As a professional agent, you help the underwriter with ethical fact finding in the field to identify these hidden hazards. The third category is the legal hazard, which refers to external factors like changes in liability laws or government regulations that might make claims more expensive for the insurance company in the future. Now, let us discuss the science of setting the price, which we call the rating. equation. The premium that a customer pays is not a random number, and it is not a guess. It is calculated using a very specific formula where the premium is equal to the sum insured multiplied by the rate. The sum insured is the total value of the protection provided, while the rate is the price per unit of that protection. To find the correct rate, the company looks at two things, which are probability and severity. Probability, which is also called frequency, is a measure of how likely it is that a loss will happen. Severity, which is also called impact, is a measure of how big the financial loss will be if it actually occurs. The underwriter uses historical data from the last many decades to predict these numbers and arrive at a fair rate for the risk. This ensures that a safe driver pays a lower rate than a reckless driver. The money that the customer pays as premium has a very specific structure. It is divided into two main components. The first component is the pure premium, which is also known in the industry as the burning cost. This part of the money is calculated to be sufficient only to pay for the actual losses and claims of the people in the pool. It is the fuel that keeps the insurance engine running. The second component is the loading, which is the extra money added to the pure premium to cover the operational expenses of the insurance company. This includes the salaries of the staff, the rent of the offices, the cost of electricity, and the commission of the agents who serve the customers. It also includes reserves for future emergencies and a small amount of profit for the company to stay in business. Finally, we must understand the cost sharing mechanisms that help keep the system stable, which are deductibles and franchises. A deductible is a feature where the customer agrees to pay the first portion of every single claim from their own pocket. This encourages the person to be more careful, and it also eliminates the massive paperwork costs for very tiny losses like a small scratch on a door. A franchise is slightly different but works toward a similar goal. In a franchise, the insurer pays nothing at all if the loss is below a certain limit. However, if the loss goes even 1 rupee over that limit, the insurance company pays the full amount of the loss from the very first rupee. Both of these tools are essential for keeping the premiums affordable for everyone in society because they prevent the pool of funds from being wasted on small maintenance issues. As a professional agent, you are the architect of security who builds the bridge between the customer and the company. Since we have mastered the science of underwriting and how the price is calculated, let us move forward to see how a policy is managed once it has been issued and what timelines we must follow to keep the protection active.